Good morning, friends. Let's continue with our discussion. In the previous session, we had started with the subject, understood what is mutual funds, and we did one concept in that. Let's quickly summarize what we did in the previous session. Mutual fund is basically an instrument for long term wealth creation. It is an industry which is employing around 86 lakh crores of investor money. The purpose is very simple: invest, create wealth, and with the wealth, there will be something called as a passive income for the investor. In order to evaluate this, we did first concept called mutual fund return versus the individual return. The return which an MF generates has to be more than what an individual, keep participating, has to be more than what an individual wants because of two ratios. What are the two ratios? Initial expense ratio and annual expense ratio. The initial expense ratio is one time expense, whereas the AER is a recurring expense throughout the year. Because of this, it becomes mandatory for the mutual fund to earn more than what an investor wants. Broadly, we had a formula called MF return is equal to what? Own return divided by 1 minus the initial expense ratio plus the annual expense ratio. Second thing we learned is something called as cost benefit analysis. What is cost benefit analysis is, in case there are opportunity cost of own investing, we have to factor that in our analysis whenever we are doing our problem. This is what broadly we understood in the previous session. We'll just continue. Can you just close this? We'll just continue with the discussion. I'll be moving now towards the next set of concepts. Okay. Any doubts on the previous concept? I told you to do question number 1 at home, which was broadly same as question number 2. If you have done at home, you would have understood that it is just copy paste of question 2. Purpose was simple. I didn't want to do everything in the class, so I gave you some question to be done at home. Let us proceed now. We move to a concept called holding period return versus the annual return. Let's understand this first. Okay. Any idea what is the meaning of the term return? What do you mean by return? You would have used this term multiple places. Somebody has to participate. Earnings, okay. Return on investment, okay. What else do you mean by the term return? What we get, okay. Benefit, investment, okay. Benefit derived. All are return. All whatever you have said is basically the term return. Return, as the name indicates, what do I get back out of an investment? Whenever we do an investment, we do expect that something has to come back to us from the investment. Now, a simple meaning of the term return is, we would have learned return on investment, return on equity, return on asset, different names you would have understood. Broad meaning of return is what I get back, what I get back by doing any investment minus what I give divided by what I give into 100 to express in percentage. If you don't divide, it is return in rupees. If you don't divide by the denominator, it is called return in rupees. If you divide, it becomes percentage. It becomes percentage. Generally, people understand returns as a percentage. They don't understand returns as an absolute rupee. For example, if I create a fixed deposit to the bank, I will be asking, what interest are you going to pay? And bank will say, we will pay 7%, 5%, 6%, 8%. No bank will say, I will give you 20,000, 30,000, 40,000, 50,000. Return is generally understood as a percentage. It can't be understood as an absolute number. As an absolute number, you can't understand the word return. So return is what I get back minus what I give divided by what I give into 100. When we invest in a share, there is a closing price, there is a opening price, and the gap between the two is broadly the return you generate out of investing in an equity share. Closing price and opening price, this difference is called as return. When I invest in share, do I get any other income? I get dividend income. So broadly, this is the return I generate by investing in a share. Closing price minus the opening price plus the dividend. If you want in percentage form, divide by what you invested. You don't want in percentage form, don't divide. Okay. I invest in a debenture. I invest in a debenture. Debenture again closing price minus opening price. Do you get anything from the debenture? Interest divided by the opening price. Opening price is what I give. Opening price is what I give. Okay. Property. Closing price minus opening price. Do I get anything from the property? Rent. So every asset has generally two types of income. One is a capital appreciation kind of an income, and the second is a regular income, which is interest, dividend, rent, or any other form. It could be interest, dividend, rent, or any other form which you see. So the broad formula for return is what I get back minus what I give divided by what I give. This is what you would have learnt as return on investment, return on asset, return on equity, any of the definition which you would have seen in CA Inter on return computation. All of them broadly focus on this area called what am I getting back by what am I giving, what am I getting back minus what I give. If I talk to my parents and I tell ROE, ROA, all that, they'll not understand. They'll say how much money went in, how much money is coming back. You only talk about money. I don't understand anything else. Money given, money returned back. Money given and money returned back. Other things don't matter to me. What matters is I gave 20,000, 30,000 came back. I gave 50,000, 60,000 came back. All others are just technical names. All are technical name. What ultimately matters is gave something, got back something, gave something, got back something. Like we have a price in case of a share, price in case of a debenture, price in case of a preference share. For mutual fund, the name is called NAV, net asset value. In the same chapter, maybe after one or two class, you'll understand how NAV is calculated. But for mutual fund, we don't use the word price. We use the word NAV, net asset value. So the formula is closing net asset value minus the opening net asset value plus the dividend income divided by the opening net asset value. What I get back minus what I give divided by what I give into 100. This is what the formula is. Formula we don't understand. I don't even want to get into formula. If ICI allows me, I'll write the formula as not this. For me, the formula is this. What I get back minus what I give divided by what I give. Obviously, in exam, I can't write this. So I have given a vague explanation. The basic formula is this. After that, you can create any type of a formula. So here they say something called as NAV1, NAV0, D1, CG1. I'll discuss as we proceed. But basic logic is return is equal to what I get back minus what I give divided by what I give into 100. Into 100 if you want in percentage. Somebody doesn't want in percentage, then don't do into 100. Then don't do into 100. Don't divide by the denominator. But if I have to compare, what generally I do, I open SBI website, get their interest rate. I open ICICI website, get their interest rate. So comparison can only happen in percentage form. Otherwise, you can't do a comparison. Somebody tells me I'll invest in property, I get a return of 20 lakhs. I don't understand. 20 lakh on how much investment tells me the percentage, and then I decide whether 20 lakh on 20 CR, 1% useless investment. If it's 20 lakh on a 20 crore investment, 20 lakh on a 2 crore investment, decent. 20 lakh on a 2 crore investment looks decent. 20 lakh on a 1 crore investment, huge. That is a very good return. So return has to be only in percentage. It can't be an absolute number. Wherever you do comparison, for example, if I'm getting an interest of 5 lakh, I don't understand that. Tell me the percentage interest getting paid. Percentage interest, percentage rent, percentage dividend, all have to be in percentage form. Absolute form, people don't understand certain item. One of the item is written here. Understood till this? Okay, let's see a practical angle. Whatever you see practical angle will be a problem in some time. There was a fund called HDFC Flexi Cap Fund. It had a plan called income distribution come capital withdrawal plan. You will understand about plans as we proceed. So in this plan, the mutual fund will be paying dividend. There are certain plans where mutual fund do not pay dividend, do not give any dividend. Income distribution come capital withdrawal. Practical data, it paid a dividend of 7 rupees on March 5, 2026. This fund paid a dividend of 7 rupees. When I started, NAV was 78.067. When I ended a year later, 75.401. There were two NAV. All these are practical data, exact practical data. So here, the opening price is higher, closing price is lower, technically called capital depreciation. The capital, generally we have an appreciation. Here there is a depreciation of the price. Price has gone down rather than price going up. Rather than price going up, price has gone down. 9379 anyone's vehicle. Okay, okay now. 1865 anyone's vehicle. Sorry. 1865's vehicle key. Anyone has left their key? Under room. Okay, let's discuss this. There was a closing price and there was a opening price. The opening price is 78. The closing price is 75. Price has gone down. Price has gone down, and this is one of the problem of investing in equity or mutual fund. You can also have a negative depreciation, or technically you can have a negative returns also. But dividend was decent here. How much is the dividend paid? 7 per unit. Same HDFC Flexi Cap has another plan called growth plan. The same HDFC Flexi, they give multiple option. Here dividend is not paid, but their NAV is different. The NAV of the plans are different. Don't worry on the calculation part of it. I don't want you to do any calculation. Calculation we are going to do in 2-3 minutes when we solve problem. Understand the practical angle. HDFC Flexi Cap plan is one of the mutual fund plan that has two plans in my example. IDCW plan called income distribution come capital withdrawal, and there's another plan called growth plan. Both almost the same return. Okay, both almost. Ideally that should be very close to each other because it is the same plan. One plan dividend is paid, one plan dividend is not paid. In one plan they have paid the dividend, in one plan they have not paid the dividend. How do we do the calculation? Very simple. What I get back minus what I give divided by what I give. Closing price minus the opening price plus dividend divided by the opening price. In one case, closing minus opening is negative. Closing minus opening is negative. Technically, you are losing capital. You are losing capital, but good part is 7 rupee dividend came. 7 rupee dividend came. Another plan, the closing minus opening is positive and it generated some return. It generated some return. Same HDFC Flexi plan. If they give you IDCW, there's a different way of evaluating it, and there's a growth plan which is little different. Formula is very simple. What am I getting back compared with what am I giving? Compared with what am I giving? Any doubts on this? Was understood the formula? Okay. Now we did this calculation. 11 lakh I get back, 10 lakh I invest, or sorry, 10 lakh 50 I get back, 10 lakh I invest, divided by 10 lakh. No dividend, other things. Can you tell me the percentage here? 5%. Okay. Now, is 5% a good return or a bad return? Just I'm asking you, 5% is it a good return or a bad return? Technically a bad return, because fixed deposit can also give you a superior return thus. But the only thing is, this 5% is for 1 month. This 5% is for 1 month. 5% in 1 month, is it good or bad? Keep participating. 5% in 1 month. If somebody tells you we will give you 5% every month, 5% every month, is it a good return or a bad return? Good. So generally the return needs to have a multiplier called 12 by m. It needs to have a multiplier called 12 by m to calculate annual return. To calculate the annual return, just doing into 100 and telling 5% doesn't make any sense. Is it 5% for a month, for a quarter, for a year? You go to a bank, ask for FD interest rate. Bank tells 14-day FD interest rate 0.9%. Then I don't understand what is 0.9%. I want the yearly interest rate. I want the yearly interest rate. You go to any bank, ask interest rate, they'll only give you the yearly interest rate. You will say, I want a 1 month FD. Again, they'll give you yearly interest rate. You want a 5 month FD. Again, they'll give you yearly interest rate, because people understand only yearly rates. People understand only yearly rates. Outside the finance world, you go and ask somebody and tell interest rate is 1% for 4 months. He'll be thinking, what are you telling? You just tell me the yearly rate. Just tell me the yearly rate. No banks will tell you the proportionate rate for that period. So if I do 12 by m, this becomes 60%, and 60% is a huge return. 60% is a huge return. 5%, not happy. I am not happy with the 5% return. But 5% per month, 5% second month, 5% third, fourth, fifth, sixth, seventh, eighth becomes a huge money. Becomes a huge money. So generally return has to be for a year. Return has to be for a year. Can't be, it can't be for a proportionate period. So institute says you have two types of return: holding period return and annual return. Holding period return means without doing 12 by m in the formula. Without doing 12 by m, I say I have an holding period return of 200%. 200% for how many years? 25 years. 8% per year. Then it is only 8% per year. 200% got excited. But then you said 25 years, it is like very insignificant. It becomes an insignificant number. So generally, anywhere you ask return, the mutual fund, when they declare their past data, they'll only give annual return. They'll only give the annual return. Nobody would say that last 10 years we gave 400% return. They'll say last 10 years we gave 40% return. We gave 40%, 20, 30, whatever percentage. So return which we calculate has to be only annual return. Has to be only annual return. exam problem solving, institute can ask either of it. They may ask you holding period return, they may ask you annual return. Holding period return can also be asked, annual return can also be asked. For annual return, just multiply with 12 by m. Just multiply with 12 by m. Any doubts in this? Clear? Understood? Okay. Now, dividends, when a company pays, dividends are paid out of what by a company? When will a company pay dividend? Profits. If you earn profit, you pay dividend. Mutual fund, any idea what will be there in the credit side of the mutual fund? What are the income which mutual fund will earn? Mutual fund can earn dividend. They can earn dividend. What else they can earn? Capital gain. Anything else they can earn? They can also earn interest, because the mutual fund can invest in equity, can invest in debt, it can invest in anything. Practical world, all this is clubbed together, and out of this, when you pay dividend, practical world calls it as IDCW, income distribution come capital withdrawal. They just use a term called IDCW distribution. IDCW distribution 7 per unit. I am paying a dividend of 7 per unit. Our institute, because certain countries this is prevalent, because we learn finance not only from India point of view, we learn it from a global point of view. If you pay dividend out of this, if you pay dividend out of this, institute calls it as D1, dividend of first year. If you pay dividend out of CG, it is called CG1, dividend out of the capital gain income. For us, both are same, both are dividend. Whether D1 is also dividend, CG1 is also dividend. Dividend paid out of the dividend income of the mutual fund, dividend paid out of the capital gain income of the mutual fund, dividend paid out of the capital gain. Why are we having two different terms? Only because our institute follows it, and some countries this is prevalent. Some countries this is prevalent. In India's context, these two are clubbed together and given a name called IDCW, income distribution come capital withdrawal. Either I distribute the income, sometimes even my capital is distributed back. Capital means I reduce my investment value and then give back the money. So here institute says what you get back is called NAV1, D1, CG1. You will be getting back by investing, you get back NAV1, D1, CG1. What you give is NAV0 divided by NAV0. For quick understanding, I generally club this together. NAV1 minus NAV0 plus D1 plus CG1 divided by NAV0 into 100. If you do into 12 by M, if you do into 12 by M, it is called annual return. And if you do without 12 by M, without 12 by M, it is called holding period return. It is called holding period return. Able to understand the concept? Now I am putting some number. Let me put the number which you see here. Closing NAV 75.401, practical data. Closing is 75. D1 and CG1 put together is 7 rupees. D1 and CG1 put together is 7 rupees. When I tell you to do calculation, do it. Otherwise, I don't want. Understand the concept. Numbers is not my worry. Plus 7. NAV0 is the opening NAV, which is 78.067 divided by, this was a 1 year calculation, so 12 by 12. This was a 1 year data. I purposely picked a 1 year data, so 12 by 12 into 100. 12 by 12 into 100. Why are we doing this calculation? Without doing this calculation, how will I compare mutual funds? How will I compare where to invest? Do I need to do practically this calculation? No, generally the MF will declare all these numbers, but maybe you are part of the mutual fund AMC and you are calculating and sending it out. You are doing the calculation and sending this data across, or you are creating the structure. System automatically calculates it. The system will calculate and throw the number. Purpose is simple. Return is calculated for comparison. For comparison. Any doubts on the concept? Any doubts on the concept? Holding period return versus the annual return. Is it only here I'm going to discuss? Same concept I will discuss in share valuation, business valuation, portfolio management. That time I'll not be explaining the formula again. That time formula explanation may not come. Understand very clearly. That's why I'm spending a lot of time here. Initial chapter concepts will take more time. Later some linkage could be there. Those concepts are not repeated again. NAV1, NAV0, D1, CG1 divided by NAV0 into 100. You are interested to practically check this. Take any one mutual fund, see their NAV a year back, see their NAV today, add the dividend if you have any dividend data, calculate and see the number which they have declared. More or less same numbers will be there. More or less the same numbers are going to be there. NAV1, NAV0, D1, CG1, NAV0 into 100. This can be done for a property, for a share, for a debenture, or for anything, even you would have learned ROI, ROE, ROA. All of that broadly is around this formula only. Any doubts here? Clear? Yep. 0 means today, 1 means future. Okay, so there is a doubt by for live online guys, I'll also tell you the doubt. See, the basic formula is NAV1, NAV0, D1, CG1. D1 and CG1 technically doesn't mean 1 year alone. It basically means NAV1 means closing, NAV0 is opening, D1 and CG1 are the difference are for the period of closing minus opening. If this is 5th year NAV, all 5-year dividends have to be added here. All 5-year dividends have to be added. Or I can say closing price minus the opening price plus all dividends plus all capital gain in this period divided by opening price. Divided by opening price. Basically, whatever dividends come to me. Why we use the word D1 CG1? Because generally we do it for 1 year. Generally we do calculation for 1 year. But if it's a 5-year problem, it is D1 to 5. D1 to 5. If you say 1 year, 2nd year, 3rd year, 4th year, 5th year, I didn't mean D1 as first year. I only meant D1 to be the dividend between the closing period and the opening period. If closing is 2020, opening is 2000, all 20-year dividends will be added there. All 20-year CG1 will be added there. 20th year closing NAV minus the 20th year opening NAV. Clear? Any doubts in this? NAV is price only, no assumption. And opening capital appreciation. That's I told very clearly. The CG1 is our CA Institute creation. This has nothing to do with practical world. This is just our institute creation. If you ask me in the practical world, there's nothing called CG1. Why have they created this term? Because some countries still use it. Some countries do use it. CG1 means nothing to do with your capital appreciation. CG1 is the dividend paid out of the capital gain of the mutual fund. Why is it created? Only our institute follows it. Practical world, there is nothing like this. There's nothing like this. So you can call D1 and CG1 as the combined dividend. It is basically the CG1 does not mean it is capital gain. CG1 is dividend income. D1 is also dividend income. Both are dividend income. Both are dividend income. When they paid that 7 rupee dividend, if I go and do the accounting, 7 could be paid with 2 rupees from the dividend income, 5 rupees from the capital gain income of the mutual fund. Any doubts here? So NAV1, NAV0 is called capital appreciation. The technical name is capital appreciation. D1 is dividend. CG1 is dividend paid out of capital gain. Dividend paid out. That is why when I was explaining this, I came to the mutual fund income statement. Otherwise, I didn't even want this explanation because in India, this is not prevalent. But for you to understand, you have to understand the income statement of the mutual fund. The mutual fund will have dividend income. I can also use the word R1. R1 is dividend paid out of the rental income. Dividend paid out of the, if at all I use a term like that, there is no term like that, but I am just giving you an example. Dividend I1, dividend paid out of the interest income. Dividend paid out of the interest income. In practical world says, I don't want all this headache. Club everything together and call income. Club everything together and just call it as income distribution come capital withdrawal. Income distribution come capital withdrawal. I don't want this word D1, CG1, all different names. Club everything together. Club everything together and just give a single name. Any doubts on this? Able to understand this? Can we proceed ahead? Clear? Okay, let us see a problem now. In this concept, please mark 3 and 4. We are going to see this in question 3 and 4. 3 and 4. Okay, can we proceed? Let's come to question 4. Let's come to 4. Following information is extracted from steady mutual fund scheme. Asset value at the beginning of the month, annualized return, distribution in the form of CG and income, distribution in the form of CG and income. You are required to calculate the month end NAV, limit your answers to 2 decimal, provide a brief comment on the month end NAV. Let's read it again. Following data is extracted from steady mutual fund scheme. Asset value at the beginning of the month. Asset value means NAV at the beginning of the month. NAV at the beginning of the month. Keep participating. What shall I call this as? NAV 0. Annualized return. Return is given directly. Return is given directly. How much is the return here? 15%. Distribution in the form of CG and income. Distribution in the form of CG and income. Technically nothing but dividend paid. Nothing but dividend paid. How much is the dividend paid? 0.50 and 0.32. For our problem solving, we will be calling one of them as D1, one of them as CG1. By mistake, a student did not call it as D1, CG1. He clubbed it together. Answer will still remain same. Answer is going to still remain same whether you call it as D1 or CG1 or you don't call it. Okay. Calculate the month end NAV of the mutual fund. Listen. Generally, we do a forward working question. What is forward working is to apply the formula and get the return. Institute of late, 20 marks of the paper becomes a reverse working. What is reverse working is, for example, I give you 18.43. I give you 18.43 or sorry, question 2 we did. I give you 17.96 and tell you to reverse work 15. Tell you to reverse work the 15 number. I give you MF return, you calculate the own return. I give you the mutual fund return and you are required to calculate the own return. Our mind is tuned to work the other way around. What is other way around? I give you own return, you calculate the mutual fund return. But I can alter the problem. Or I give you MF return, I give you own return, get me the AERS balancing figure. Get me the IERS balancing figure. Get me the MF return as balancing figure. Get me the own return as balancing figure. Problem 2 which we did, I can make 4 different questions out of it. I can make a question where I give you mutual fund return, own return, AER, IER is balancing figure. I give you IER, AER, MF return, own return is balancing figure. Has institute done this one attempt, November 24, 70 marks of the paper was reverse working. Entire 70 marks was reverse working. Entire paper almost they made it as reverse working. Problem is we are generally tuned to, for example, in accounting, I do journal entry, I do ledger posting, ultimately a trial balance comes and a balance sheet. I give you balance sheet and I tell you, you go back and prepare a P&L or go back and prepare a journal entry in the reverse order. In the reverse order, can you do the transaction? Which needs lots and lots of conceptual clarity. The problem which I'm going to do is very simple. But generally, a reverse working problem needs lots and lots of conceptual clarity. There is no difference in working, zero difference in working. If I go back today and tell you to do this problem where I change the number as MF to own, you will not find it difficult because you just did own to MF. You just did the own return to MF return. Reverse working, no problem. No problem at all. But generally, when you do in an exam situation, you have not specifically only read this, you have read so many concepts. And when you do reverse working, generally students find it little difficult. So any problem, I do it in the class. You want to do reverse working of that. For example, this question. You can use AI for all these good purposes. Put the data and tell AI, can you give me a reverse working question with similar adjustment but different numbers? It will give you a reverse working question. You can solve the reverse working if at all you want to. You don't want to solve a reverse working, I have no problem because concept remains the same. So when you are closer to the exam, you can't do all this. Today, if you are 1 year before your exam, 2 year before your exam, you find some time, copy this and tell it to draft a reverse working question. It will draft a reverse working question and it will test your concept clarity. Because the homework problems which I give are generally very easy. The purpose is just I wanted you to practice something, but that don't serve any purpose. For example, you would have done this one at home. When you would have done this at home, you would have thought that it is just waste of time. Purely waste of time was to do that question one because there was nothing there in the problem. Nothing there in the problem. Today also I'll be giving you few questions and again nothing will be there. Nothing will be there. You may ask why are you giving it? Because I want to complete the entire material and I don't want to do everything in the class. That's the only purpose I am giving you to do at home. But still I want to test my clarity a little better. Then one thing you can do is use the AI tool for better preparation. Don't tell it to draft new questions and all. You give the question and tell it modify the problem. Any area you want to learn that concept more, give the question and tell it to modify or make it reverse working. To either modify or reverse working. These are the two things which students generally start practicing now. Okay, coming back to this question. I have the NAV 0. I need the NAV 1. Month end NAV is called NAV 1. Month end NAV is called NAV 1. I have NAV 0 in the question. I have D1 in the question. I have CG1 in the question. And I need which number? NAV 1. NAV 1. That's the number I'm trying to search here. Understood the question? Can we start practicing this? Now, right. annual return equal to annual return equal to annual return equal to, can you tell me the formula? Okay, first write this, what I get back. In exam you are not writing, but in class we will write this 2 3 times, and let's get used to it. Okay, what I get back minus what I give divided by what I give into 12 m into 100. 12 by m into 100. 12 by m into 100. Let's write it again. AR equal to annual return equal to, what I get back is NAV1, DE1, CG1. I get back all the three. You can write all the three and subtract NAV0 or immediately subtract, doesn't really matter, whichever way you write. NAV1 minus NAV0 plus D1 plus CG1, 12 by M into 100. Okay, what is the annual return given in the question? 15. Okay, now listen, this is little important. Listen, should I write 15 percentage or 15 this side? Should I write 15 percentage because it's a reverse working question? Should I write mathematically 15, 0.15 or 15 percentage? Just to 15 if you do into 100. Just to 15. Just to 15. Don't put a percentage. Because mathematically you get the number. You get the number as mathematically the number which comes to you is 15. In the calculator we get the number as 15, but we write 15%. When you do into 100, you get the number as 15. Forward working, no problem. Reverse working, when I'm doing, if you write 15 this side, 0.15 this side, 15 percentage this side, it will change the answer. It will change the answer because I am doing a reverse working here. I am not doing a forward working. I am not doing a forward working. So you can write 15, you can write 0.15, you can write 15%. I usually remove the 100 from this side. I remove the 100 from this side and write 0.15. Right? 0.15. Can I write 15? Yes, you can write, but do into 100 in the other side. Do into 100. This is very relevant for a reverse working scenario, not only here, any other place. Any other place. 15 is also okay. 0.15 is also okay. 15% is also okay. This side write 0.15. 0.15. What is the closing NAV? Not given. Let's call it as A. NAV1 is A. Any alphabet you can give, or you can call it as NAV1 also. What is NAV0? What is D1? 0.5. CG1 divided by, please complete this and let me know the answer. I'm not doing anything beyond this. You complete and let me know. Into 12 by 1. Into 12 by 1. Into 12 by 1. Please complete the calculation. I'm also doing it, but you complete the calculation. I think we get the same number. We get the same number, 65.78. 65.78. This is my closing NAV. Nothing tricky and all. Nothing tricky. This was May 24 exam question. This was your May 24 exam question with obviously changed numbers. 65.78. Any doubts first on the number here? Got the 65.78? Everyone got? If somebody is working, you'll have to tell me. I'll wait. Else I proceed it. Everyone got the number? 65.78. Okay. They wanted if comment on the month end NAV. Generally, I can't pass any comment on just comparing NAV. But here, because the opening NAV and closing NAV is remained the same, Institute just passed a comment saying that there is no change in the NAV. There is no change in the NAV. But generally, you can't pass any comment just comparing the NAV. Just comparing the NAV, we can't pass an comment. Any doubts on this? Write a comment. There is no change in month end NAV. There is no change in month end NAV. No change in month end NAV. Clear? Understood? Can we proceed? Any doubts on this question? Please do your marking. Easy, moderate, difficult, wherever you want to put a tick. Put a tick wherever you want to, your wish. End result has to be 1/3 easy, 1/3 moderate, 1/3 difficult. When you complete that mutual fund chapter, see 1/3, 1/3, 1/3. If it's not happening in some chapters, it's okay. But broadly, this will be the final mix. Can we proceed? Okay. 3 is a practice question, but it is practice in our class now. I'm not even reading the question. You read, you start doing in your notebook. I will do it in the screen. I will also do, you also do. I will start in a minute. You read, you start doing it. And if you have a doubt, I'll take it up. Question 3. Again, a very basic question. I've already started getting answer in live online, but you keep doing it. And this is how most of the practice question will be. Some difficult one will also come, but most will be like this. Monthly return. I'm explaining it, but you need not wait for my explanation. Some of you would have already completed it also. NAV 1, NAV 0, T1, TG1 by NAV 0. Other live online student, you keep typing the answer into 100. No 12 by M. No 12 by M needed for the monthly return. For the monthly return, I don't need a 12 by M because I'm calculating 1 month return and the data is given for a month, technically called holding period return. Technically called holding period return. If you do 12 by M, that is the annual return, which is the second requirement. There is a annual return also asked in the question and there is a monthly return also asked in the problem. Or you do 12 by M, get the annual return, divide by 12. Divide by 12, you will get the monthly return, whichever way you do. You get monthly, get yearly, or get yearly first, divide by 12 is the monthly return. Divide by 12 is the, some of you would have done into 12 by M, no problem. You got the annual return, divide by 12. Annual return, divide. The closing NAV is 20.06 Opening NAV is 20, dividend is 0.375, CG1 is 0.03, whole divided by 20 into 100. If you do 12 by M, you directly get the annual return. Without 12 by M, you get the monthly return in this case. Why monthly? Because the data is for a month. Data is for a month. Answer is 0 point per month OR. I close here itself. OR into 12 is my annual return. Or get the annual return, divide by 12. Divide by 12. The other answer is, please put a tick. If you feel it is easy, those questions you are not going to see again. So that's the purpose, to cut down the questions. 7.65% per annum. And this you should follow not only for my subject, other subjects also. Try to classify your questions whenever you do your study. You only have to do the marking. Don't depend on faculty's list. We generally give a last day revision list and all. But you only have to create your list, because what is difficult for you, you only know. What is easy for somebody can become difficult for you, and difficult for others can become easy also. So you will have to do your own marking. Any doubts in this? Can we proceed? Understood the concept? Any doubts on this calculation? Done? Clear? Okay. Can I proceed ahead? Okay. I go back to the next concept, where we are not going to do a solve problem now. Problem solving will happen later. It is the 21st question, one concept is there, but I have to discuss the concept now. In one exam they said annual return 24%. Annual return is 24%. I don't have any practical example for this. I don't need an example here. Holding period return 8%. Holding period return is 8%. I want to know what is the period of holding here. I want to know what is the period of holding. 1 month, 2 month, 3 month, 4 month. I want to calculate period of holding here. I want to calculate the period of holding here. How can I do the calculation here? 24 by, answer is what? No, 3 is wrong. 4 months. How did you get 4 months? 24 by 12. Okay. Okay. So more or less that logic, very simple. 24% equal to 12 months. 24% equal to 12 months. 8% equal to question mark. 24% equal to 12 months. 8% is equal to question mark. Cross multiplication will give me the period of holding. The cross multiplication will give me the period of holding. I'll repeat again. 24% I earn in 12 months, because the annual return is always a monthly data. The annual return is always, so the annual return is always a yearly data, and that is 12 months. That is 12 months. 8% is question mark. What is cross multiplication? Period is equal to, tell me the multiplication. 8 by 24 into 12. 8 by 24 into 12. I'll give another example. Annual return 14%. Holding period return 56%. Holding period return is 56%, and the annual return is 14%. The annual return is 14%. Here I can say I want to do 1 year. I want to compare it with 1 year. You can write 12 months also. You can call it as 1 year also. You can call it as 12-month also. You can call it as 1 year also. 14% equal to 1 year. 56% equal to what? 4 years. 56% is equal to 4 years. 14% is equal to 1 year. 56% is equal to 4 years. Another example. annual return 18%, holding period return 1.2%, give holding period in days. I want the calculation in days, not months. I want the days. I want the days. Listen, 18% equal to 365 days. 18% equal to 365 days. 18% is equal to 365. You can say 18% equal to 365 days. You can say 18% equal to 12 months. You can say 18% equal to 1 year. All are same only. All are same. 1.2% equal to question mark. 1.2% equal to what's the answer? 24 days. 24 days. Able to understand the concept? This got tested in one exam question. The question we will see later because I need more concepts to be explained. That is the 21st problem. So I can't do the question now. But as we proceed ahead, this concept will come back after 3-4 classes. That time you should remember the concept. That time the concept clarity should be there. If I have the annual return, if I have the holding period return, I can get balancing figure as period of holding. I can get the period of holding in years, months, days. Years, months or days, whichever we are comfortable. Depends on the question. You will understand as we proceed. Any doubts here first? Any doubts on the concept? Okay. This is your concept 3. Period of holding, reverse working. There is a formula, but I don't believe in formula. Okay. Don't get into the formula trap. Wherever possible, let us do without the formula. Formula will become a trap because you have to remember so many things. Write 21 against this concept. You will see this in question 21 later. Question 21. Concept 3 will be done in question 21. I can't do it now because you don't know the other concepts. And 21 has lot other adjustments. Any doubts till this? Can we proceed? Clear? Any doubts here? Okay. Can you tell me the formula for annual return? Tell me the formula. NAV1, NAV0, D1, CG1 into, this is my usual formula everywhere. Everywhere my preferred formula. Everywhere means in the entire AFM, we generally do monthly calculation to save time and do approximate. For example, I invested on March 1, invested on March 1, exited on March 31, exited on March 31, invested on March 1, exited on March 31. 1 month is the investment. 1 month is the investment. This is what we generally do. 1 month is the investment. Institute, some question will use the word saying 1 year consists of 365 days. Wherever this word is there in the problem, not in this chapter, anywhere in AFM, then you should not do 12 by M, you should do 365 by D. You should do 365 by D. For example, I want to calculate 6-month interest. What you do? 6 by 12. But if this word is there, you may have to do 181 by 365, 182 by 365, or 184 by 365, 183 by, because how many days I don't know. I'll have to do the calculation. January to June, we generally do 6 by 12. But January to June, how many days I don't know. I'll have to do the calculation. Divide by 365. Will it lead to a major variation? Small variation in answer. But that small variation, ICA will deduct the marks. So that is why entire AFM, wherever they use a word 1 year consists of 365 days. You will see this totally in 7-8 question in out of the 520 problems where this word will be there. 1 year, they may use word 365, they may use the word 360 also. If 365 is used, 365 by D. 360 is used, 360 by D. But wherever this word is there, you have to do days computation. Formula same, nothing different. Okay, somebody says no, I will not do days calculation, I'll do months calculation. Answer will not have any major variation. Answer will not have any major variation, but whatever variation you get, for that also institute may deduct marks. Institute may deduct the marks even for a slight variation. So just to be on the safer side, wherever you know the data, and they use the word what? 1 year consists of 360 or 365. 1 year consists of 360 or 365. Where can it be used? I want to calculate interest expense. Generally, we do 6 by 12, 3 by 12. That will not work. That will not work. You have to do number of days by 365. Number of days by. You want to calculate annualized return. 365 by number of days. 365 by number of days. Like this, there are at least 7-8 questions in our entire book where this is used. Where this is used, you have to take care that you use what? 365 by number of days. But this leads to one challenge. When I do days calculation, you will see one challenge. The challenge is, for the days computation, I invested on March 1 end of day. March 1 end of day. So in days, March 1 should not be considered. March 1 should not be part of my days. Then it is March 2 to 31st, 30 days. March 2 to 31st is 30 days. Or I invested March 1 opening, and March 31st opening itself money came back. March 31st opening, then 31st will not be part of the days. 31st will not be part of the days. So it can also be March 1 to 30, or March 1 opening invested, March 31st closing redeemed. Both will be part of the days calculation. Both will be part of the days, or both may not be part of the days also. March 1 is also not there, 31st is also not there. This entire headache is removed if I do 12 by 1 month. 12 by 1 month. I don't want to know whether March 1 is part of the days or not part of the days. This problem institute has created for us because we will not have data. When did the investment happen? Practical world, I'll have extra information. So best is just to do monthly calculation. But in case specific words like this are there, I am left with no choice. And days calculation consistency is not there. Institute solution itself doesn't have consistency, and they are not wrong. The problem is we don't know when was the investment done and when was the investment redeemed. When was it done and when was it redeemed? Should March 1 be part of the days? Should March 31 be part of the days? Should both be part? Should both be excluded? We don't know. And whichever assumption you take, logically everything can be argued on. I can argue 31 days. I can argue 30 days. I can also argue 29 days. I can argue for all the three. Again, an element which has zero relevance in the practical world. Zero relevance in the practical world, because practical world, I don't want this headache. I'll just do 12 by 1. Our days also I want to do, I'll have information. I will have information. When did you make the investment? When did you redeem the investment? Generally, investment is made at the opening of the day. Redemption happens at the closing of the day. Generally, this is what will happen, but we don't know. So, institute generally what they do is they include one of the day, exclude one of the day. Include one of generally. Again, I can't be sure. Okay. Again, I can't be sure. You also can't be sure. You can't do anything with this. I'll be happy. Question like this don't come in exam, because I don't know what assumption do I take. Time permits, I may give multiple answers also. There are few places where I advise students to give multiple answer. This is one place I may give multiple answer. One doing 29 days calculation, one doing 30 days calculation, one doing 31 days calculation, but all that provided I have time in exam. I do not have time in exam. write one assumption and proceed it. And I've seen institute, if you give multiple answer, if one of them is correct, they give the marks. That they are doing. They are not checking whether you have given multiple answers and all. If one of them is correct, they give the full marks for that, because it is at this place a luck element, because I don't know what assumption institute is taking, what assumption am I taking, and not in our hands also. If institute gives three answers in their key and we have given one of the answer, very happy. Institute should tell, make suitable assumption and give the answer, will be very happy, because then only I am thinking whether student is thinking or not, that it can be 29 days, it can be 30 days, it can be 31. And one beautiful thing which has happened is MCQ. MCQ, this headache itself is not there. You did 29, answer is not there. You try 30, answer is there, one of the choice, put a tick there. Put a tick for that number. Or you did 29, you have an answer very close to it, put a tick to that. Or you did monthly calculation also, you got a closer answer, put a tick. So MCQ, this entire headache is removed. The entire headache is removed. So this part which has happened is 30 mark. I somehow genuinely feel that this 30 should go to 50, should go to 70, 80, whatever number, because MCQ are the only way to test the full concept clarity. The students' conceptual clarity comes generally in MCQ form. So here, coming back to the concept, March 1 to 31, March 1 to 31 can be interpreted in different ways, can be interpreted in different ways. The bigger point is, if question uses a word, 1 year consists of 365 days, be ready to do 365 by D. Be ready to do 365 by D. Any doubts till this? For example, NAV 1 25, NAV 0 20, D1 2, CG1 3 divided by 20, which is what you generally do. I don't want any calculation. I'll tell you if I need calculation. You generally do 12 by 1. You generally do 12 by 1 if it's 1 month. If it's 5 months, you do 12 by 5, whatever it is. Institute says do 25 minus 20, 2, 3, 20, 365. Denominator can be 31, 30, 29. March 1 to March 31. March 1 to March 31 can be 31, can be 30, can be 29, and all the three will give different answer. All the three will give different answer, and 12 by 1 also will give different answer. 12 by 1 will also give different answer. I don't want the numbers. I just trying to focus on the concept. Few places we will not focus on the numbers. Okay. Any doubts here? 12 by 1 can be done. 365 by 31 can be done. 30 can also be done. 29 can also be done. All are same. All are same. And almost same number will come. MCQ, no issues at all. MCQ, no issues at all, because one of the answer will be very close to it and it will match. Institute will not give saying that for 31 I give an answer 30. They will not do that. They will give you an options which is easy for you to put a tick and then proceed ahead. Any doubts on the concept here? Any doubts on the concept? A concept, the return concept, I'll be using in 20-30 problems across AFM, not mutual fund. And this concept around 10 problems in entire AFM. So after 40 classes, suddenly I'll say we'll have to do 365 by D. So that time you have to remember that this is like one concept which we learned. Any doubts here? Can we proceed? Understood the concept? Okay. Let's see it here. Days or months calculation for annual return. Question specifies a year consists of 360 or 365 days. A year consists of 360 or 365 days. Do return computation on number of days. Do return computation on number of days. No such information. Do computation on months basis. Whatever I'm explaining, everything is there in the concept book. You just need to read this and keep coming to the class and going to the exam only with this. Question bank is just for practice. The main book is only this. Number of days, redemption date minus investment date. Investment made on March 1, redeemed on March 31 can be taken on 31, 30, 29 based on assumption. ICI hasn't been consistent in including or excluding. Including also consistency is not there. Excluding also consistency is not there. If they had consistency, I would have told follow this. But there isn't any consistency and they are not wrong. They are not wrong. Only thing is, what do I do in an exam situation? Because information is not there. Understood the concept? Tied to the concept, right? 21 and 22. You will see this in question 21 and 22. I have discussed it now because it is a related concept, but problem solving will happen later. 21 and 22. Clear? Can we proceed? Any doubts on this? Understood? Okay. I'll explain concept 5, which is one of the most important concept, and then show you a practical data, and then we'll come to problem solving. The dividend, the mutual fund declares a dividend. You can call the dividend as D1, CG1, whatever name you want to give. This dividend, as an investor, I have two choices. As an investor, I have two choices. They will give payout or reinvestment. Payout or reinvestment. Any idea what is reinvestment? What could that mean? They will add it, understood. So in what form they'll add? You are in the right direction. They will add to your investment. How will it be added? Yeah, so they will be giving us extra units. They'll be giving us extra units. For example, I started with 1000 units, payout end with 1000 units. Start with 1000, end with 1000. Whatever dividend is declared comes to my bank account. Comes to my bank account. Invested 1000, redeemed 1000 whenever I'm redeeming. If it's a payout, you can do 1 unit return also or 1000 units return also, all are same. NAV1, NAV0, D1, CG1 by NAV0, 12 by M into 100, payout formula will work. Payout formula will work in that situation. Payout formula will work in this situation. Reinvestment, I start with 1000 but end with 1500 or any number. I'm just giving a random number. Okay. What will happen here? In a reinvestment plan, there'll be a date, opening units. For example, mutual fund declared a dividend on 25/3/2006. 25/3, some random date I've taken. Okay, 2026. I had 1000 units. I had 1000 units and mutual fund declares a dividend. Mutual fund declares a dividend. They declared a dividend of 7 rupees. They declared a dividend of 7 rupees. If they declare a 7 rupee dividend, I get a total dividend of, this will hit my bank account generally. This will hit my bank account generally. In a reinvestment plan, 7,000 does not come to me. I reinvest at an NAV that could be 20, 25, 40, 30. It can be any number. It can be any number. They have to give a reinvestment NAV. What does NAV reinvestment is? On that date, 7,000 will be converted into 700, 800, 1000, 1500. I don't know the number. I don't know the number, but it has to be converted. It has to be converted. So they may divide by whatever NAV on that day. For our discussion, I'll call it as 100. I'll call it as 100 to make it quicker calculation. Extra units. 7,000 divided by 100, I got 70 and my closing is 1070. Doesn't end here. They may declare one more dividend also. They may declare one more dividend also. If they declare one more dividend, 25 6 2026, I start with 1070. I start with 1070. This time they declared 10 rupees. They declared 10 rupees. I will be getting 10,700. I'll be getting 10,700. Again, I'm repeating only one thing. Pay focus on the concept, not the numbers. Numbers when we do solving. Numbers is when we do solving. Okay. 7,000 came, reinvested. 1,070, 10, 10,700. On this day, NAV is 200. I get some extra units and the chain goes on. And the chain goes on. If this happens, you can't use your formula NAV1 minus NAV0. That formula will not work because that formula will work only if the number of units remain stagnant. Number of units remain stagnant. Then what is the formula? Formula is nothing but what I get back minus what I give. What I get back is closing units into closing NAV. What I get back is closing units into the closing NAV. How many closing units? I don't know. I have to do the calculation. It won't be same 1000. It won't be same 1000. If it remains same 1000, do the per unit calculation itself. NAV1, NAV0, D1, CG1. Closing units into closing NAV. Opening units into opening NAV, no dividend income, no CG1 income. No, I don't get any of that income. I get what? Closing units into closing NAV, opening units into opening NAV, divided by opening into 12 by M or without 12 by M, into 12 by M or without 12 by M. The real formula, there also what I get back, here also what I get back only. There also I can do into number of units, NAV1 into number of units, NAV0 into number of units, D1 into number of units, CG1 into number of units, divided by NAV0 into number of units. Why should I do everywhere number of units multiplication? I can do there also in the formula NAV1 into number of units, NAV0 into number of units, D1 into number of units, CG1 into number of units, divided by NAV0 into number of units. But there I was not bothered because units were remaining same. Units were remaining same. Here I am really bothered because units are not going to remain same. Units are not going to remain same. So how do I do the calculation? I do the formula what I get back minus what I give divided by what I give into 12 by M into 100. Understood this? I'll come to numbers in some time. One practical example. Dividend payout plan, dividend reinvestment plan, same HDFC flexi cap, same HDFC flexi cap. This I had explained earlier, 5.55%. This is if you pay dividend. If you do reinvestment, assuming 1000 was the start, assuming 1000 was the start, you end with 1097. You end with 1097. I have taken exactly the practical data and here the return is 6.01. Here the return is 6.01. Don't focus on the numbers. Understand concept. Numbers part we will practice in some time. Numbers anyway we are going to practice. So understand first the broader concept. HDFC flexi cap. If you do payout of the dividend, you earn 5.55%. If you did reinvestment, you earned 6.01% in this case. Okay, you earn, it can be higher also, it can be lower also, but we have earned how much? 6.01% in the reinvestment plan. Don't worry about the numbers. Don't waste your time on the numbers as of now. Same HDFC flexi cap, payout 5.55, reinvestment 6.01. There was a growth plan 5.95. Growth plan is 5.95. Growth plan means it doesn't pay any dividend. Growth plan doesn't pay any dividend. When dividends are paid, I am given two choices: payout, reinvestment. You can choose whatever you wish to. You can do a payout, you can also do a reinvestment. The MF will allow you both. If you pay out, bank account will have a money, and you can manually also reinvest. You can manually also reinvest. Reinvestment plan, no paying you, no reinvesting back. I myself do it. The MF itself does the reinvestment. MF itself does the reinvestment. Also, one more thing, practical world, units will be in decimal. Units, the units which you have can be in decimals. In the practical world also, the units, number of shares can't be in decimal. Shares can't be in decimal. In mutual fund, I can get fractional units. I can get fractional. Fractional means you can get 1.089, 2.013. All these are possible in the practical world. The number of units can be in decimal. Okay, same flexi cap plan, payout. This is NAV1, NAV0, D1, CG1. I have not tried doing into number of units. I have not tried doing into number of units. You want to do into number of units, do into number of units everywhere. You will get the same answer. Dividend reinvestment plan. Dividend reinvestment plan. Get the dividend, reinvest the dividend. Get the dividend and reinvest the dividend. First, clear on the concept. I want to know the concept. Numbers part, I'll come to it. Any doubts on the concept? I give you two choices. Whenever you open, for example, you can invest in mutual fund through Zerodha. You open Zerodha, they have an application called Coin. You search HDFC Flexi, they will list multiple options. One of the option will be IDCW. One of the option will be growth plan. Growth plan, you can choose which you want, and in the dividend plan they'll give you two options: payout and reinvestment. Payout and reinvestment. But today the reinvestment part has become little complicated in the practical world, so some of the funds are not giving because of tax deducted at source. Earlier TDS was not there on dividend. Maybe 5 years back or 10 years back, dividend was tax exempt. So now when you reinvest in the practical world, unfortunately reinvestment will not be 7,000. Reinvestment will only be 6,300 or 6,500 because of the TDS, because of the, this is practical angle. Okay, I keep touching the practical angle so that you appreciate that. So some of the funds, I think, have stopped giving the reinvestment option, or even if it is there, then this TDS and other provision have to be taken into picture. Understood the concept? Clear? Okay, I show it in the concept book now. Okay, another two things I have to discuss. Okay, before I do this, dividend, there are three ratios related to dividend. You could have seen this at CA Inter: dividend rate, dividend yield, dividend payout. You could have come across these three terms: dividend payout ratio, dividend rate, dividend yield. If I say dividend rate is 20%, I should multiply 20% with what to get dividend per share? With the face value. So dividend rate 20% into face value of share. Again, there in the concept book, again there, I know what is there in the book. If something new I tell, I'll specifically tell you to write. So you can be rest assured everything is there in the book. If something new is there, I'll tell you. 20% into face value of the share. 20% into face value. Here you will do 20% into face value of the mutual fund. In case they give percentage. If they say 7 per unit, no headache. If they say 7 per unit, no headache. Dividend yield. If they say dividend yield, you multiply with what? You remember dividend yield formula? Ratio analysis. DPS divided by. So this is DPS divided by face value. This is DPS divided by MPS. This is DPS divided by EPS. DPS divided by EPS. So dividend yield they mention multiply with market price or the NAV. Multiply with market price or the NAV. Dividend payout if they mention multiply with earning per share, which is not there for mutual fund generally, but it will be there when I go to shares. When I go to share, the term dividend, three names can be there: dividend rate, dividend yield, dividend payout. I don't want all this headache. Tell me dividend 7 rupees per unit, 8 rupees per unit. I don't want this headache. But if they give percentage, they may say dividend rate 20%, multiply 20% with face value, which is 10. Multiply 20% with NAV, which could be 25, which could be 25, and multiply 20% with EPS, which could be 40. So same percentage but different dividend rate per unit. Same percentage but different dividend per unit. Different dividend per unit. Able to understand this? Again, some of this will keep coming back at different places. Not some, most of the concepts you need to be very, very clear, because after 25 classes, suddenly you will see a term dividend yield somewhere in security valuation or somewhere in some other place. That time you are not able to relate, it becomes difficult. So dividend rate, dividend yield, dividend payout. Dividend rate, dividend yield, dividend payout. Dividend rate is multiplied with what? Keep participating. Face value. Dividend yield is multiplied with market price. Dividend payout is multiplied with earnings per share. Here it's earnings per mutual fund. I haven't seen that coming in exam. Okay, for mutual fund earning they have not given. That can also come, but they haven't done that. But payout can come in our other places. What is the other places? Your share valuation. Okay, now let's see here. Dividend declared by a mutual fund, dividend rate into face value. Dividend rate is to be applied on face value. Yield is to be applied on NAV. Yield is to be applied on NAV. Payout plan, paid in cash, return computed using formula of concept 2. Concept 2 is NAV1, NAV0, D1, CG1 divided by NAV0 into 100. In fact, the formula is same for both. It is closing value minus opening value. There also closing value minus opening value. But here you have to do into number of units. There you need not do into number of units. There you need not do into number of units. So closing value minus the opening value divided by the opening value into 100. Closing minus opening by opening into 100. Closing values, closing units into closing NAV, opening values, opening units into opening NAV divided by opening value into 100. Any doubts on this? Numbers part of it we will do in some time. Clear? Understood? Okay, I'll repeat this. Payout plan, the mutual fund will give me choices. It will give me a choice called dividend plan. Non-dividend plan is also there. Non-dividend headache is not there. Let's not even discuss that. If it's a dividend plan, they'll give you two choices: payout, reinvestment. Payout and reinvestment. Today at home, search HDFC Flexi Plan, and then you keep searching. Whatever I say, you do the practical search part of it. HDFC Flexi Cap, and then search growth, they'll give a different NAV. Search for dividend payout, if at all they have both the option. I'm not sure whether they have both the option. Dividend payout will have a different NAV. Reinvestment will have a different NAV. The dividend is practically called IDCW. IDCW, and that may give you a different answer. Payout, what I get back minus what I give, NAV1, NAV0, D1, CG1. Reinvestment, what I get back minus what I give. What I get back minus what I give. What I get back is called closing value. What I give is called opening value. Closing value is closing units into closing NAV, opening units into opening NAV. Keep participating. Divide by opening units into opening NAV into 12 by M or 365 by D into 100. 12 by M or 365 by D into 100. Clear? Understood the concept? Any doubts on the concept here? Any doubts on dividend rate multiply with face value, dividend yield multiply with in market price or NAV, dividend payout multiply with earnings per share. Any doubts on this? Clear? Understood? Done. Let's take a break of 10 minutes. We learned about two plans. One is your dividend payout plan and a dividend reinvestment plan. The choice is with us. We can kind of do anything. Now, whatever I have discussed, let us do it on a problem. Concept 5 in the side, right? Question 5. You will see that in question 5, which we are doing now. Concept 5, question number 5. Every concept, I'll give you a question number mapping most of the time. So, the purpose is simple. You learn the concept, you practice a question or an MCQ. Question or an MCQ to learn the concept. That's all. Read concept and practice either an MCQ example. If you are not getting grip with an MCQ example, then you have to solve a proper question. Either of them is sufficient, because during the revision phase, you can't be doing all the problem. You can't be doing all the problem. Let us come to question 5 now. Question 5. Mr. X, an investor, purchased 300 units of mutual fund at the rate of 12.25 per unit 1 year ago. Over the year, Mr. X received 1.25 as dividend, capital gain distribution of 1. You are required to find Mr. X holding period return, assuming that this no load fund has an NAV of 13 as on today. Mr. X holding period return, assuming all dividend and capital gain are reinvested into additional unit at an average price of 12.5. What difference would it make in terms of returns available, and which option is preferable by the investor? Let's read it again. Mr. X, an investor, purchased 300 units of the mutual fund. I have purchased 300 units of mutual fund at an NAV of how much? 1 year ago. This was purchased 1 year ago at the rate of 12.25. Over the year, Mr. X received what? 1.25 as dividend and capital gain distribution of 1. Dividend also came, capital gain distribution also done, 1.25 and 1 per unit. Mr. X holding period return. Holding period return means into 12 by M is not needed. 12 by M is not needed, but would not make any difference 1 year ago. We invested 1 year ago, assuming this no load fund. What is no load fund? You will understand in the chapter as we proceed. Okay, that is concept 9 or 10. Has an NAV of 13 as on today. 12.25 and 13. Which is NAV 1? Which is NAV 0 here? NAV 1 is 13. NAV 0 is 12.25. If I compare this 13 today with any other NAV later, this is NAV 0 and that is NAV 1. That is NAV 1. Today does not mean NAV 0 always here. Today here means the closing NAV and 1 year ago means the opening NAV in this problem. Today is technically NAV 1 and 1 year ago is NAV 0. Generally this will not happen, but this problem. Okay. Holding period return, assuming all the dividend and capital gain distribution are reinvested into additional unit at an average price of 12.5 per unit. You have reinvested at 12.5 and earlier some numbers were given. I am going to solve this question, but I'm going to change the numbers. Okay. Why I'm changing the number? Because the given number you can practice once. The given number you can practice once if you want to. You don't want to practice, don't practice also. That and all I leave a choice, because today class I may not be giving any practice question. Mostly no practice question for you. So I want to alter this problem itself. Now, right, altered problem. Modified question. Modified question. Investment period 6 months ago. Modified question. Investment period 6 months ago. The investment happened 6 months ago. Reinvestment NAV. 13.5. Two changes I'm making, okay? Investment period 6 months ago, reinvestment NAV 13.5. Otherwise as it is, okay? Otherwise as it is. With this changes, we are doing the problem. At home, you can practice the numbers as it is also. Okay. Part 1. Mr. X holding period return, assuming this no load fund has an NAV of 13 as on today, has an NAV of 13 as on today. In part 1, have they talked about anything on reinvestment? Keep participating. Anything on reinvestment? Anything on reinvestment? No. So there is a payment done of 1 rupee dividend, 1.25 rupee capital gain. 1 rupee dividend and 1.25 capital gain, and there is no data on reinvestment. Part 2, is it talking about reinvestment? We did reinvestment into additional unit at an NAV. I have changed the number 13.5 at an NAV of 13. Part 1. Holding period return. Holding period return. Holding period return. Part 1, is it a payout plan or a reinvestment plan? Payout or reinvestment? Payout. NAV 1, NAV 0, D1, CG1, NAV 0. Should I do 12 by M? No. So that 6 period, I just like that modified. No use. No use, because we are calculating watch return. We are calculating holding period return. For holding period return, I don't want to know the period of investment. I don't want to know the period of investment. I just like that modified to explain you that that has no relevance here. That has no relevance. If they ask annual return, do 12 by M. Annual return, do 12 by M. Original problem, holding period return and annual return is same, because it's 1 year investment. It is 1 year investment into 100. What is the closing NAV? 13. Opening 12.25. Dividend 1 point. CG1, sorry, 1. Whole divided by. Please bring a calculator, else you will struggle in the computation part of it. Do the calculation now. Live online guys, keep typing the answer. Is it per annum return? No, because it is a 6-month return. This is the 6-month return. I have no, this is not per month. We did 6 months ago. We did 6 months ago. So this is 6-month return. If you do 9 months ago, this is 9-month return. Without 12 by M in the formula, if you do, that is the return for the holding period. And the holding period can be anything. The holding period can be a month. Whatever problem we did till now was a monthly investment. Here it is a half yearly investment. Here it is a half yearly. You want yearly into 12 by 6. Into 12 by 6 in this question. Able to understand till this? Any doubts in this? 24.49%. How many units did we buy? 300. If I want, I can do into 300, into 300, into 300, into 300, into 300. I'll still get the same answer. I can do into 300 across all the places. Into 300, into 300, into 300. No point in doing it, so we have not done it. But you can do into 300 at all the places. At all the places. Any doubts in this first? Understood? Can we proceed? This is payout plan. This is payout plan. Which is better, we don't know, because it all depends on ultimately what returns are we generating. Understood the payout plan? Can we proceed? Any doubts on the payout plan? I'll repeat. Here I have not brought number of units into picture. Somebody brings into 300, no problem. Go ahead and do it. No problem. Go ahead and do it. You will still get the same answer. You will still get the same answer. Can we proceed? Understood this? Clear? Done? Okay. Reinvestment plan. Reinvestment plan. Return equal to what I get back minus what I give divided by what I give into 100. All your AFM concepts, if you want to get full clarity, the only way is, can you explain this to a layman? Can you explain your concepts to somebody who doesn't understand finance? If you can explain that, you have understood the concept. You cannot explain them. You go and tell your parent NAV1, NAV0, they don't understand that. You have to explain in a way they get the concept. Concept is simple. What are we getting back? What are we investing? Divided by what are we investing? Certain technical parts I can't explain, but easier parts, majority you can explain to someone else. You are able to explain it, you have understood the concept. Not able to explain, then you are struggling with the concept somewhere. Okay, what I get back is called what? Closing units into, right, closing units into closing NAV. What I give is opening units into opening NAV divided by opening units into opening NAV into 100. Clear? Leave some 4 lines and come down, because units are not readily available and I need a calculation to be done. And whatever I was explaining earlier, now we will do the calculation. Now we will do the calculation. You will now play with the numbers. Understood till this? Leave some 4 lines, come down. Computation of units on maturity. Units on maturity. We will need 6, 7 columns, manage space accordingly. 7 columns, 7 or 6, manage space accordingly. 8, dividend percentage, opening units, sorry, yeah, second column should be opening units, third column should be dividend percentage. If you have not written, you can interchange, but doesn't really matter. Total dividend, reinvestment NAV, units allotted, closing units. 8, dividend percentage, opening units, total dividend, reinvestment NAV, units allotted, closing units. I should ideally interchange the second and the third column, but wouldn't really matter. Have they given on which day the dividend is paid? Any date they have given? Sex date, doesn't matter. Sex date. Have they given any percentage dividend? The dividend is mentioned as 1.25 and 1. 1 is also dividend only. 1.25 is also dividend. 1 is also dividend. 1.25 is dividend. 1 is also dividend. Both are dividend only. Both are dividend. If they give a date, I can do, one could be on one date, another one could be on another date also. Nothing is mentioned in the question. Later when you do, you will see multiple dividends problem. Okay, 1.25, I don't have percentage. 1.25 plus 1, 2.25 per unit. If they give percentage, I'll have to multiply with face value or the NAV, dividend rate, dividend yield, dividend payout. Dividend rate, dividend yield, dividend payout. 2.25 per unit. How many units are there? 300 into 2.25. 300 into 2.25. 300 into 2.25. Clear? How much? Generally, this will come to my bank account. Investment, it came to your bank account and you have also given it back. You also given it back. Came to your bank account and you have also returned. You have also returned it back. You have also returned it back. What is the reinvestment? I have altered the problem. 15 I have altered the problem. Please work with the problem I gave. 13.5. Reinvestment NAV 13.5. Understood till this? This will give me extra units now. Listen, the return for a reinvestment plan depends a lot on this. If the reinvestment NAV is less, I get lot of units and my returns can go up. And if the reinvestment NAV is very high, I will get lesser units and ultimately my returns may go down. Ultimately, my returns may go down. What will be the reinvestment NAV? We don't know. Because on that day, what happens? We have no idea. I have altered the problem and made it as 13.5. Printed answer was 12.5. Once the solution is done, I'll be able to explain how the reinvestment NAV impacts the return. This is a very important number. This will impact my returns in the end. Divide 675 much. The closing is 300. There can be a second dividend. YY date. Third dividend, fourth dividend, fifth dividend, sixth, seventh, eighth. We have one problem where there will be 4 dividends. First you do, second you do, third you do, fourth you do. Any doubts on 350? Any doubts on 350 units? Can we proceed? Understood the numbers? Clear? Any doubts on 350? First problem on the concept, I want full clarity. Second problem, I may rush the speed also, I have no problem. But first problem, get full clarity. Any doubts on 350? Anybody has any doubts on the numbers here? Understood? Practical world, we are doing the same thing for that HDFC Flexi plan. You saw some numbers. That was for HDFC Flexi. Once the chapter is over, I'll share you the practical data so that you can go through the practical data part. Because I'm preparing on a daily basis. As I do the concept, I get the data, put it there, and I'll show it to you in the end. Any doubts on 350? Can we proceed? Go back here. Give me the closing units. Closing NAV. 13. Original data, original. Reinvestment NAV alone, I said 13.5. Otherwise, all original data. Closing NAV was 13. Question said reinvestment NAV 12.5. I altered it as 13.5. 12.5 you can practice at home or you need not practice also. All depends on how much comfort you have on the concept. You need more practice, you try the other number. Minus, what are the opening units? Opening NAV. Will I also get the dividend income? No dividend income. No dividend income. Divided by 300 into, get the return here. 23.23.81%. They've asked which is better. Here, payout plan looks better. In the printed answer, reinvestment plan will look better. Why? That is what I want to discuss. Why? Because there is a different number there and there is a different number here. 23.81%. 23.81%. Any doubts on this first? Any doubts on the answer till here? 23.81%. Clear? Can we proceed? Part 3, which is better? Self-explanatory as of now. Part 3, which is better, is in our solution, payout plan looks better. In our solution, payout plan looks better. Understood till this? Okay. Now the main crux is this. Closing NAV greater than reinvestment NAV. Can you tell me what is the closing NAV? 13. Original question, what is the reinvestment? Original problem. If the closing NAV is better than the reinvestment NAV, reinvestment plan is better. Reinvestment plan is better. Listen, I got the dividend, reinvested. On the reinvested also I make more profits. On the reinvestment also I make more profit. Original data. This is original data. If my closing NAV is greater than the reinvestment NAV, original data, it's better. Reinvestment gives 25.22%. Reinvestment gives how much? 25.22%. Reinvestment gives 25.22%. Wait for some time. You will have to note this. Wait for some time. Wait for some time. I'll give you time. If closing NAV equal to reinvestment NAV, both are equal. Both are equal. You can try at home by taking 13 as the reinvestment NAV. 24.49% answer you will get. 24.49% answer you will get. Third situation, closing NAV less than reinvestment NAV, payout is better. Now, writing this is not critical. Understanding the concept is, when I do reinvestment, am I earning on the reinvestment? Am I earning on the reinvestment? I reinvested at 13.5. By the end of the year, it is 13. I am losing 50 paise. I am losing 50 paise. That is why reinvestment was bad than the payout. Reinvestment was bad than the payout. Reinvestment was bad than the payout. Where can these type of question come? These can get tested as an IBS MCQ. In an IBS MCQ, institute goes to the extreme level of testing. So in an MCQ, if they want, they can test saying that which of this relationship will hold good. Payout this is better. Reinvestment this is better. So anything they may end up asking, and they have gone to extreme level of testing in your IBS paper because it's an open book exam. So there they go to the extreme level. I'll explain again and then I'll give you time to write. Listen, when I tell you I'll give you time to write, don't write anything that time, because when something is very hard, I want to explain 2-3 times. Closing NAV, reinvestment NAV comparison. If closing NAV is better than reinvestment NAV, reinvestment has turned out to be a good one. Reinvestment has turned out to be a good one. Both equal, indifferent. Both equal, indifferent. And if the closing NAV is lower than the reinvestment NAV, we are going to have trouble. We are going to have trouble. Now, institute may ask which is better. I will do the calculation and tell which is better. But we can never know at the beginning of the year which is better. We can never know at the beginning of the year which is better. Only at the end of the year I can tell which is better. Because at the end of the year, I will have data of closing NAV. I will have data of closing NAV only at when? At the end of the year. Wait for some time. To see here, reinvestment happened at 71.772. This is that HDFC Flexi Cap plan. Closing NAV was 75.401. More. Closing NAV was higher than the reinvestment NAV. Reinvestment gave more returns. Reinvestment gave more returns than the payout plan. Reinvestment gave more returns than the payout plan. But you can know this only at the end of the year. You can't say that today I will tell which is better. Nobody can tell. Today you can't tell which is better. Only at the end of the year, closing NAV, reinvestment NAV. Whenever reinvestment happens, I will be praying that that day NAV is very low. That day NAV is very low. We don't know what will be the NAV on that day, but if the NAV is very low on that date, I get more units. I get more units, and we never know what will be the NAV on that day. We never know what will be NAV on that day. Understood first the concept? Clear? So coming back to this question, if I go back, if I do as per the problem, reinvestment is better. As per the problem. As per the problem, reinvestment is better. As per the modified question, payout is better. As per the modified question, payout is better. Now write two columns. Situation, which is better. Situation, which is better. Situation, which is better. Closing NAV greater than reinvestment NAV. Closing NAV greater than reinvestment NAV. Closing NAV greater than reinvestment NAV. If this happens, the closing is higher. Which is better? Tell me. Reinvestment plan. Reinvestment plan. Closing NAV equal to indifferent. Indifferent means both are equal. Indifferent means both are equal. And listen, I can never tell which is better, because only at the end of the year we will understand. So I can't do a planning saying that I'll go for payout or reinvestment. That is impossible. That is impossible. You can't say payout you want to do or reinvestment you want to do. Or you can keep it flexible also, practical. What is flexible? Get the dividend. You decide after the money came in. That is a practical angle. You got the money. After getting the money, you want to reinvest, reinvest. You don't want to reinvest, don't reinvest. So that's a practical angle people may follow also. Last situation. Closing NAV less than reinvestment NAV. Payout is better. Payout plan is better. Understood the concept? Any doubts on the concept? Clear? Got clarity? I'm giving you 2 minutes because I've done a little lengthier concept. I'm giving you 2 minutes. Go through all the calculation. Any place you have a doubt, let me know. 2 minutes for you. Okay. We are done with payout and reinvestment. Now I introduce another concept. This is the part of it. There are 4 plans in the practical world: growth plan, payout plan, reinvestment plan, bonus plan. This is not there for you. It is there in the practical data. Okay. So you just understand it. Growth plan means NAV will keep going up like this. It can go down also in case markets are bad. But in a growth plan, I don't pay any dividend. I don't give any capital gain distribution. Whatever you earn is reinvested in the mutual fund itself. Rather than giving you whatever they earn is reinvested in some shares of another company, some bonds of another company, some debentures of another company, and your NAV keep going up. Your NAV keep going up. For example, HDFC Flexi Cap growth plan has an NAV of 1969. This had an NAV of 75. The gap is because they would have paid you approximately dividend of around 1800 rupees. The dividend of from the beginning. From the beginning, dividends would have been kept on paying. They would have kept on paying dividend. So whenever you pay dividend, some of the assets are given to you. Practical well NAV goes down that day. Why it goes down? Little later discussion. But in a dividend plan, I keep giving back your money. In a growth plan, I keep giving, instead of giving back, I keep reinvesting the money into ICICI shares, bonds, debentures. So growth plan, all earnings are reinvested in the fund. NAV grows over time. NAV grows over time. Classic example, HDFC Flexi Cap 1989 versus 75 versus 75. Dividend payout, you are aware what happens in dividend payout. I give you the dividend. I give you the dividend. Dividend reinvestment plan, units will keep changing like this. 10,000 suddenly became 10, 5, 26, 11,000, 11,830. Units will keep changing. Units will keep changing. NAV may go up, may go down. NAV is a different story. But units will keep changing. Units will keep changing. We did a problem, 300 became 350. Another dividend 350 will become 400. 400 will become 500. 500 will become 600. 600 will become 800, 900. So first plan is growth plan. Invest in 1,000, end with 1,000. Invest in 1,000 and end with 1,000. The main benefit here is your NAV will keep going up. NAV will keep going up does not mean guaranteed. Okay. Indian stock market last 1.5 years, no major up movement. There were periods where it was down also. Down means you invested 100, but you'll get back only 90. Negative returns are possible in mutual fund, and an exam question can come with a negative return also. Okay. Growth plan, an NAV which started with 10 for HDFC Flexi is today at some 2,000. Today at around 2,000. Dividend payout, every NAV started with 10. Okay. Every NAV started with 10. This is at some 75. At some 75. Payout and reinvestment both. Payout and reinvestment both are same. To put it very simple, dividend reinvestment is like a growth plan. Like a growth plan. Why like a growth plan? In growth, you don't get any money. Reinvestment also, you don't get any money. Reinvestment also, you don't get any money. In growth plan, you get 100 units into a higher NAV. In reinvestment, you get 500 units into a lower NAV. 500 units into a lower NAV. So practical world, many AMC have discontinued this reinvestment plan because saying that you go for growth plan. Why are you doing reinvestment? You don't want dividend, don't get the dividend. You don't want dividend, don't get the dividend. You are taking the dividend, reinvesting it again. That is nothing but growth plan. No, practical world, that is nothing but a growth plan. What does growth plan do? It does not give you any money. What does reinvestment plan do? Does not give you any money. Does not give you any money. Understood till this? Payout plan. Payout plan is dividends is paid. NAV will go down whenever dividends are paid. Why, you will understand maybe in another 1 or 2 classes. As of now, that concept is not needed. Growth plan, opening units equal to closing units. Payout plan, opening units equal to closing units. Reinvestment plan, opening units is not equal to closing units. Opening units is not equal to closing. How do I calculate? That 7-column format. 1 dividend, 2, 3, 4. It can be anything. Bonus plan means like they do a bonus ratio, bonus share. When you declare bonus share, number of shares will keep going up. Here number of units will keep going up. Number of units will keep going up. 10,000 become 20, may become 30, may become 40, may become 80, may become 1 lakh. In the end, whether you do bonus plan, whether you do payout plan, whether you do reinvestment plan, whether you do growth plan, all the 4 should almost give similar returns, because return does not come based on the plan. Return comes out of where is the mutual fund investing. Where is the mutual fund investing? And mutual fund invest for all the 4 at same place only. All the 4 are invested at same place. There is nothing like separate investment. So if you put in HDFC Flexi, they will invest at the same place. Accounting wise, a chartered accountant will be there who does a separate accounting for growth plan, gives a growth NAV. Another same chartered accountant does a separate accounting, gives a payout plan NAV, gives a bonus plan NAV. Fund manager doesn't understand all this. I don't understand all this. I am the fund manager. I will only be making investment. Money is available. Accounting wise, you say this is bonus plan, this is growth plan, this is reinvestment plan. That is accounting angle. That is the accounting angle. Able to understand this? Practical world, they offer only 2 plans: growth plan, dividend plan. No bonus plan also. No bonus. I haven't seen any in many mutual fund declaring this bonus plan also. Because what is bonus? Units keep increasing. What is the benefit? I don't get any benefit by units increase. No, because in the end, units into NAV will almost be same. Will almost be same, because where is the money going? If somebody tells bonus will have more value, everybody will put in bonus plan. No, why will somebody put it in growth plan or in the reinvestment plan? So theoretically, all the three, if you take last 10-year returns of HDFC Flexi Cap reinvestment plan, HDFC Flexi Cap growth plan, the returns will be same. Last 10 years, almost same, whether it is a reinvestment plan or a growth plan. Bonus plan, you may not get much in the practical world. You search also, you will not get much in the practical world. Able to first understand the concept. In a growth plan, I can technically use a formula called NAV1, NAV0, D1, CG1 by NAV0 into 12 by M into 100. I can technically do that formula. In a reinvestment plan, what I get back minus what I give divided by what I give. Payout plan, again you can do NAV1, NAV0. If units are not changing, I have no problem. I did a reinvestment plan, no dividend were declared. Reinvestment plan, no dividend is declared. You can do NAV1 minus NAV0 formula also. You can do NAV1 minus NAV0. Bonus plan, again units will change. So bonus plan units will change. Reinvestment plan units will change. Growth plan units will not change. Payout plan units will not change. Why are they giving so many options? Lot of investor want flexibility. Now the entire MF industry has restricted them to two plans mostly, a growth plan and a dividend payout plan. Dividend payout, I don't remember seeing a reinvestment plan recently. Generally payout, there can be a reinvestment also, but generally a payout plan and a growth plan. Payout plan and a growth plan. Able to first understand the concept. In a growth plan, NAV will keep going up. NAV will keep going up as long as markets are going up. Okay. In a reinvestment or a payout plan, NAV will suddenly fall down, but units will increase or money will hit the bank account. Units will increase or money will hit the bank account. With the money, what you can do? You can also reinvest. With the money, you can reinvest. Where can I reinvest? Same mutual fund, some other mutual fund, your wish. You can reinvest in the same mutual fund. You can put the money, get the dividend from HDFC Flexi, put that in Parag Parikh Flexi. Your wish. You can do anything in the practical world. Bonus plan, units may double, triple, anything can happen. NAV will keep going down. How does it go down? You will see when I do a problem. Understood first broad concept? Clear? Now, for reinvestment plan, we do this table. Get the closing unit. What is the table format I do for bonus plan? Let me discuss it. Again, formats are not mandatory. You want to present it in any other way, you are free to do it. Listen, in a bonus plan, we'll have a date. Let's call it as Jan 1. Opening units 5,000. There will be a bonus ratio. They have to give a bonus ratio. The ratio could be 2:1. 2:1 means 2 extra units for 1 unit, or it can be 1:3. 1 extra unit for every 3 units. 3:10. 3 extra units for every 10 units. 3 extra units for every 10 units, and units can be in decimal. Units can be in decimal. So there is a bonus ratio. Let's assume it is 3:1. Extra units 5,000. 3 by 1, 15. Closing is 20. Then February 1, opening 20. 1:1, extra 20, closing 40. This will keep going on. This will keep going on in case of a bonus plan. The problem which we are going to solve will have 2-3 bonuses being declared. Any doubts till this? Understood? Can we proceed? Clear? Now, in the concept book, concept 6, side right question 6. Concept 6 in the side right question 6. Question 6. Growth plan mutual fund does not declare dividend or bonus. Units purchased on day 0 will be equal to units redeemed on maturity. Whatever you purchase on day 0 is the closing units, is the closing units on maturity, closing units on maturity. Bonus plan will declare bonus units. Payout plan, declare dividend, and same will hit our bank account. Same will hit our bank account. All of this will have some impact on NAV. You will understand that as we proceed, because I have not explained how NAV is calculated. And I can't do that area without doing this. So there is linkage. Some concepts you will better appreciate once the entire chapter is done. But as of now, they will give the NAV in the question. This is your format for reinvestment plan: date, opening units, dividend percentage, total dividend, reinvestment NAV, new units, closing units. This is your bonus plan: date, units held, bonus ratio, bonus units, and closing units. Most of it, what I explained, will be there in the concept book. It will be there in the concept book. Any doubts here? Understood? Can we proceed? Clear? So there is a bonus plan, and there is a dividend reinvestment plan, and there is a growth plan. These three type one question we are going to see now. Any doubts till this first? Okay. In the practical world, the STCG taxable, LTCG, both are taxable. The question which we are going to do, long-term capital gain will be exempt. Long-term capital gain will be exempt. Short-term capital gain will be taxable. The problem which I'm going to do in some time. Short-term capital gain is exempt. Long-term capital gain is, sorry, short-term capital gain is taxable. Long-term is exempt. What is the period of holding for short-term? Less than 12 months. So if any units got allotted to me within the 12-month period due to dividend reinvestment, due to extra bonus, all that will qualify under STCG. And if it's more than a year, it is LTCG. Less than a year, more than a year. Okay. STCG, when I calculate my STCG, I compare sale value minus the purchase value. This is the broad formula. Sale value minus the purchase value. Is securities transaction tax a tax deductible expense? For capital gain, it is not a tax deductible expense for capital gain. For capital gain, it is not a tax deductible expense. Okay. For purchase value, when I do a bonus plan, the cost of acquisition is taken as 0. Cost of acquisition is taken as 0 for the bonus plan. If at all any unit got allotted in the last 12 months, the cost of acquisition of a bonus plan unit. Capital gain, how you calculate? You will remember in your inter days, sale value minus the purchase value. There can be other deduction. I'm not getting into all that because we are not getting into the taxation fully. Sale value minus the purchase value. What is sale value? Number of units into the selling price. What is purchase value? Number of units into the purchase price. The purchase price for a bonus unit is 0. The purchase price for a bonus unit is 0. Understood this? Clear? Any doubts on this part? Concept 7 we'll be doing later. Concept 6, taxation impact. Cost of acquisition of bonus unit is 0. STT is not tax deductible expense for computing capital gain. In the side, write question 6. Concept 8 is also tested in question 6. Concept 8 also in question 6. Both the concept we are going to test in question 6. Clear? 7 is some other concept. That's why I've left it in between. Okay. 8 we are going to discuss in concept question 6. Understood this? Can we proceed? Clear? Now question 6 is a very lengthy problem. I may not do the full question today. Whatever possible we'll do today and then continue mostly in the next session. Or if permits, we'll try to complete it also, but I doubt. Let's read it now. Sun Moon Mutual Fund sponsored open-ended equity-oriented scheme, Chanakya Opportunity Fund. 3 plans: dividend reinvestment plan, bonus plan, growth plan. Dividend, reinvestment plan, bonus plan, growth plan. At the time of new fund offer on 1/4/1999, on 1/4/1999, Mr. Anand, Mr. Bachchan, Mrs. Charu, three invested 1 lakh each, chosen B, C and A plan respectively. History of the fund, different dates, NAVs are given, and the NAV is different for plan A, plan B and plan C. You can call this is the NAV of HDFC Flexi Cap plan on these dates, and they are different, and it has to be different. On 31st July, all three investors redeemed their in units. Calculate annual rate of return, long-term capital gain exempt, short-term capital gain 10% income tax, securities transaction tax 0.2%, only on sale and redemption, only on sale or redemption, not on purchase, not on purchase. STT is how much? 0.2%. Ignore education cess. Ignore education cess. Same problem. If it comes today, if it comes today in exam, even LTCG can be taxable. Even LTCG can be taxable, and that will lead to little more calculation. But as of now, I have one data. Three schemes are there. What are the three schemes? Keep participating. Dividend reinvestment plan, bonus plan, and growth plan. Okay, there's a doubt in live online. Why NAV is different on the same date? That is how practically NAV will be, because your NAV calculation, how is it done? I'll explain later. But if dividends are paid, NAV technically goes down. Dividends are paid, NAV technically goes down. Why does it go down? You will 100% understand in some time, maybe 1 or 2 days more, and you will understand why NAV goes down. And to just to give you a practical flavor, same date, okay, same date, August 12, 2026, or August, yeah, 75.401, same August 12, 2086.607, same date, two different NAV, same HDFC Flexi Cap, same HDFC Flexi Cap, 2086 and 75. Why is it different? I have not explained you, and I need some more time to explain that, because I have not come to that concept, because I have not told you how NAV is calculated. Once I explain how NAV is calculated, you will understand why is it different on the same day for the three plans, on the same day for three plans. So I will come back to your doubt after later. So some doubt is there, I'll come back to that later. As of now, coming back to the question, we have three plan. All the three are having different NAV on the same day. On the same day, there are three investor. First, we will do the bonus plan. Then we will do the maybe reinvestment plan, and then finally the growth plan. We'll try to do all the three plans. Let us start with the first plan. Three people have invested. When did we invest? 1/4/1999. When did we redeem? 31st July 2009. 31st July 2009. So investment is done on 1/4/99. Redemption is done on 31st July 2009, and they want us to calculate the return. Basic formula is what I get back minus what I give divided by what I give into 12 by M into 100 to get the annual return. Without 12 by M is called holding period return. Working note 1, computation of return, Mr. Anand. Return of Mr. Anand. Can you tell me Anand has invested in which scheme? Read carefully. BCA, B, C and A. Mr. Anand, Mr. Bachchan and Mrs. Charu, and chosen B, C and A. B, C and A. What is plan B? Bracket, right? Bonus plan. In a bonus plan, will the opening units be equal to closing units? No, it is going to vary. It is going to vary. Note 1, computation of dosing units. Computation of dosing units. I columns, 8 opening units, bonus ratio, extra units allotted, dosing units. 8 opening units, bonus ratio, units allotted, closing units. Whenever a bonus is declared, there is going to be increase in the units. How many bonus are declared in the question? Tell me the dates. See first, see what is the bonus ratio? 3:4. We'll do the calculation. 5:4. Is the next bonus done? What is the ratio? 1:2. When is the next bonus declared? 24 March 2009. What is the ratio? Bonuses are there. I have no problem. You give me 10 bonus also, I can do the calculation. Concept is only same. More bonuses will take more time. 3 bonuses are there. How much money did we invest? 1 lakh. When I invest 1 lakh at the opening NAV, they'll give me units. Whatever is the opening, they'll divide by the share price and give me the number of share. Here divide by the NAV and give me the number of units. Have they given what is the NAV on 1/4/1999? 1/4/99. Any NAV given? No, any given, anything given. Nothing given, it is taken as face value. Nothing given, it is taken as face value. They can give NAV also. Nothing given, I will be allotted at face value. I'll be allotted at face value. All the 3 plans. All the 3 plans, I'll be allotted units at what rate? At the face value. What is the face value here? Divide by 10. Bracket, I write something. It's not mandatory for you to write. You can write if you want to understand the calculation. You're okay with the calculation, don't write it also. I will keep writing in bracket because somebody wants to follow the computation. 10,000. What is the bonus ratio? 10,000 into I by 4. 10,000 into I by 4. 12,000. Closing is 10 plus 12 5, 22 5. 10 plus 12 5, 22 500. Understood the number? Any doubts on this? This becomes what now? This is the opening units. This is the opening units. Now you tell me to do 10 bonus also, I will do. I have no problem. It is just that more time. 22 500. What is the ratio now? 22 500 into 1 by 3. You do in your on your own and then refer the screen. Do on your own and then refer the screen. Please do on your own. Finally refer the screen. Do on your own and then refer the screen. As much as possible, try to do the question on your own rather than waiting for me. As much as possible, you try to do on your own in the class. 37 500. Can we proceed? Okay, listen. Return is closing value minus the opening value. But here I have some expenses and all, some capital gain and all is there. So I will do rather than a formula in a table because I have to bring in this capital gain part and some STT part is there. Base formula is same. What I get back minus what I give. What I get back minus what I give. What I get back is closing units into closing NAV. But in that, Government of India will take away their share called as tax on STCG. They will also take their share called securities transaction tax. Some money will go there. Some money will go as STT and some money will go as STCG tax. I can bring that also in the formula, but it will become little tough to write. So we will do it in a table form. Understood till this? Note 2. Computation of annual return. Plus calculation amount. Computation of annual return. Particulars calculation amount. Calculation and amount. Sale value of closing units. Sale value of closing units. Sale value of closing units. Which plan are we analyzing? Bonus plan. Is it plan A, B, or C? B. 7,500 into what is the NAV for plan B? The growth guy will not have so many units. He'll have lesser units, but it will be multiplied with 82. So that is how it is compensated. In the end, ultimately, all will give similar answer. Not exactly same, but similar. 37,500 into 22.98. Tell me the value. 861. Ideally, this should hit my bank account. But from this, government takes its share. Government takes its share. One is securities transaction tax, and second is short-term capital gain. There are two deduction I have to do, and whatever amount I get after this is what I get back. What I get back is not 861. I get back slightly lower, less. Securities transaction tax. What is the percentage? 0.2% on what they mentioned? Sale or redemption. So on this 861, redemption means you are giving it to the mutual fund and taking the money back. Sale means you are selling your value to your friend. So this and all you will understand as we proceed, but basically money will come back. What percentage? Multiply, give me the value without any decimal because amount is big. I don't want any decimal. Much? 17 1724. 0.2%. It is 0.2% less. Short-term capital gain at what is the tax rate? STCG at 10%. STCG at 10%. Clear? Okay. Now you need not write this, but keep participating. When are we redeeming? Date of redemption? 1st July 2009. Listen. Any units allotted from 1st August 2008 to 1st July 2009 will have a holding period of less than 1 year. Will have a holding period of less than 1 year, and any units allotted from 1st August 2008 to 31st July 2009 will have a holding period of less than 1 year, and on this I have to pay short term capital gain. On this I have to pay short term capital gain. Any units allotted from 1st August 2008 to 31st July 2009. LTCG also taxable, then every time you have to pay tax. Every time you have to pay tax, longer calculation. Going back to the earlier table, originally 10,000 came, that is I think some 1499, that is LTCG. 2004 is LTCG. 2008 is also LTCG. 31st March 2008. 24th March 24th March 2009 is STCG. 24th March 2009. 24th March 2009 is short term capital gain. Is short term capital gain. Which date? 24th March 2009. 24th March 2009 is short term capital gain. Is short term capital gain. How many units are allotted on this day? On 7,500 I have to pay capital gain tax. On 7,500 I have to pay capital. LTCG taxable, then do one LTCG on this 7,500, do one more LTCG on this 12,500, and do one more LTCG on original 10,000. LTCG on original 10,000, LTCG on extra 12,500, LTCG on extra 7,500, and STCG on 7,000. Where do we do this? This is what exactly you could be doing as part of your practical world for any client of yours. If he gives you a statement, you will do this comparison. They give ready-made numbers, but this is what you have to do in the practical world for your clients. If they give you a table like this, original 10,000, cost of acquisition is 10 rupees. All extra units cost of acquisition is 0. All extra units cost of acquisition is 0. Original units 10 rupees purchase price. All other units purchase price is 0. All other units purchase price is 0. Able to understand the table? Any doubts on the table? If LTCG was taxable, I need to do 4 calculation. First original, first bonus, second bonus. STCG only third bonus. STCG only third bonus. Coming down here. How many units on the third bonus? What is the redemption price? Can I subtract STT? No. Minus 7,500 into 0. Minus 7,500 into 0. The cost of acquisition of a bonus unit. Cost of acquisition of a bonus unit is 0. Cost of acquisition of a bonus unit is 0. After this, no education cess. If that is there, add that also in the calculation. No education cess. Happy with this problem? This is what practically happens. I want to complicate this, I can complicate in IBS. In IBS, I can complicate this because there you need taxation understanding fully, also your mutual fund understanding. So I can bring extra adjustments if I want to do it in an IBS paper. Here very limited. STCG is taxable. How much is the amount? 1735. 17 to 35. Any doubts on the calculation here? Very simple computation. Can we proceed? I am paying 22.98 and no cost of acquisition for a bonus unit. Net realization in bracket what I get back. This is what I get back. Net realization. The money which will hit my bank account is this. 87791. Or it may hit more also, but you have to pay STCG from your pocket. You have to pay STCG. So 842,791 I get back. Putting this in a formula is difficult. That is why I'm doing a lengthy calculation. Less amount invested. What I give. Once I subtract, my numerator is ready. What I get back minus what I give. Once I subtract, the numerator is ready. The numerator is what I get back minus what I give. Divide by what I give into 12 by M into 100. Any doubts on this? Return in rupees. Return in rupees. Return in rupees. I earn how much? 7,791. This is the return I'm earning. 7,42791. The return which I'm earning is 742,791. Understood the calculation? But I don't understand what is this number. I need a percentage. I need a percentage, which is what we finally do. Any doubts on this? Annual return. Annual return. What I get back minus what I give divided by what I give into L by M into 100. You'll have to tell me the month. 842 minus 1 lakh divided by 1 lakh into 12 by M into 100. 12 by M into 100. When did we invest here? Keep participating. When did we invest? April 1999. When are we redeeming? 31st July, 1st April. I've got the answer in live online. How many months is this? Tell me the number of months. First, tell me how many years is this? 10 years and 124 months. 10 years and 4 months. 10 years and 4 months, 124 months. 10 years and 4 months, 1 to 4 months. 1 to 4 months. Able to understand this? Any doubts in this? 10 years and 4 months. 1st April means April is included. 31st July means July is included. Same thing if I have to do days calculation, gone, because so many days and all I can't do the calculation. More than a year, ICI generally doesn't get into days calculation. Very rarely they'll get into a days calculation there. Less than a year, yes, sometimes they do. So 12 by what? 124. Get the answer. Sorry, 71.88%. 71.88%. Any doubts on the computation? There is nothing new here. I'm just doing the original formula only. Just that I'm taking more time to do the calculation. Same concept, extra time to do the calculation. Why extra time? Because I had to do this analysis properly. So it took us time. Otherwise, it's the same concept. Any doubts on this? We'll do one more plan, which is the growth plan. Dividend reinvestment will take a lot of time. That we'll do it in the next session. Any doubts here? Can we proceed? Understood? Any doubts on 71.88%? Any doubts on 124 months? Any doubts on STCG tax? If there was a LTCG also, original 10,000 one LTCG, extra first bonus on LTCG, second bonus on LTCG, third bonus one STCG, which we have done. Understood this? Clear? Next part. Working note 2, computation of return of second investor, Mr. Button. What is the plan he has taken? Growth plan. Growth plan. Mr. Button growth plan. Will number of units change in growth plan? Will the number of units change in growth plan? So I don't need any calculation. I am directly going to this part. Directly going to this part, and as you tell, I will keep writing them. We are directly going to this part of it. Sale value less STT less STCG, net realization, amount invested, return in rupees, and annual return. And annual return. Quickly write it. We are directly going to this part. No extra computation. This can also be done as a per unit calculation, but in per unit, I have to bring in this STT, STCG and all, little difficult. So I'm doing lengthier calculation. Even per unit will also give you the same conclusion here. But STT, STCG, difficult to bring in the table or in the formula. So I'm doing a lengthier calculation. Again, whichever problems you do, you try to standardize the answer so that it becomes easier for you from an exam point of view. Sale value, STT, STCG, net realization, amount invested, return in rupees, annual return. Okay, coming to Mr. Bachchan, how much money did he invest? 1 lakh. On 1/4/1999, have they given any NAV? No. So they would have invested, or he would have got how many units? 10,000. 1 lakh divided by 10. What is the NAV for the growth plan? When I multiply, I'll get 8 lakh which will broadly be closer to the earlier number. Broadly 861, 820. 861 and 820 broadly will be closer because ICI has framed the question. They could have played with numbers, but broadly will be closer. 82700. 82700. There's nothing there here. You can try doing on your own also. I will keep explaining. 82700. You can do on your own. I've been repeating this only from the beginning. Try doing on your own in the class as much as possible. 82700. STT into 0.2%. 1641. 1641. 1641. 82700. 1641. STCG, no units are allotted between 1st August 2000. No extra units, only original. So no STCG, no short term capital gain. It is holding period is 10 years and 4 months. So all are long term. All 10,000 units is long term capital gain. All 10,000 units is long term capital gain. All 10,000 units is long term capital gain. Net realization is how much? 819. Invested is 719059. Same logic. Growth plan will save lot of time. We save lot of time because I don't do any of the units calculation. Bonus plan also not very tricky, but we had to do the calculation first. Can you tell me the answer here? 69 point. Ideally in the practical world, all three will be very close. Has to be very close to each other. Question the framing, they may frame it little differently, but otherwise all the three will be very close. Any doubts on this? Understood? Reinvestment plan will take time, so I'm not getting into the reinvestment plan now. Understood till this? Clear? Okay, I'm quickly revising what we did today. We started with, I want participation, we started with a concept called holding period return versus the annual return. What is the formula for return? What I get back minus what I give divided by what I give into 100. If you do into 12 by M, it is called annual return. Without 12 by M, it is called holding period return. What I get back is NAV1, D1, CG1. NAV1, D1 and CG1. What I give is called NAV0 divided by NAV0 into 100 into 12 by M. If they give you holding period return and the annual return, balancing figure can be period of holding. Balancing figure can be period of holding. What is balancing figure? Holding period return 700% equal to 124 months. Just an example, okay? 700% equal to 124 months. 69.59% equal to 12. And what is the holding period? Or you get the holding period of 124 as balancing figure. 124 becomes a balancing figure. This is second concept. When I do my return computation, I generally multiply with 12 by M. But few places we will do 365 by D. We'll do 365 by D. When do we do 365 by D? Whenever question says 1 year consists of this time period. 1 year consists of this time period, then you have to do 365 by number of days. 365 by number of days. When you do days calculation, period of holding when you compute, starting date can be part of the denominator, may not be part of the denominator. Ending date can be part of the denominator, may not be part. Both can be part, both can be excluded also. Different answers can come. Then we learned there is a payout plan and a reinvestment plan. Payout plan means what? Dividend hits the bank account. Reinvestment, dividend hits and comes back as units. Hits your bank account and it comes back to the mutual fund. Practically it doesn't hit, but that is the concept. Hits, comes back, and extra units are allotted. To calculate the closing units, we had a format. What does the format say? Date, participate. What is the second column? Opening units, dividend rate, di total dividend, reinvestment, NAV, extra units allotted, closing units. Bonus plan calculation, we had a format. Date, opening units, bonus ratio, units allotted, closing units. Closing units. STT is not a tax deductible expense, and for bonus units, the cost of acquisition is zero. For bonus units, the cost of acquisition is zero. Whatever I did in the class for for around 3 hours, we have discussed it in only 5 minutes. And this is what the concept book will do. Every class at the start, I'll revise the concept, and I'll revise. Now, I have not given you any problem, but you need to solve this example, whatever examples you see here. Example 7, example 8, example 6, example 5, example 4, example 3, small examples to make your understanding better. All examples please do at home. All examples please do it with the class. Two things you need to complete. Two mandatory things. One is example solving. Second, in your question bank, the marking should have been there for easy, moderate, difficult, and if any extra notes you want to make, extra notes. This two mandatory along with the class. I'm not giving any practice question today. If I give practice question, that also is mandatory for you. Clear? Done. We'll end with this. Thank you, friends.